Good morning, everybody. I'm very happy to see. Now, when you think about the money that you have saved or investments that you have made, where is most of it sitting right now? Is it in your jewel box? Is it locked away in an FD that gives you about 5.5%, 6%? Maybe an LIC policy that an agent sold you many, many years ago. Maybe chit fund that your friend group runs. Or maybe some of you have even mutual funds and shares, but just not sure how they're doing, right? Tell yourselves, answer yourselves in your mind as to where your money has been sitting all this while. But while you're thinking about this, here is the truth, maybe the brutal truth, if I may say so. And I'm saying this with a lot of love and respect in my heart that most of us, especially Indian women, have made like a very similar choice, right? We've chosen safety, we've chosen tangibility over growth over so many years. And there's nobody to blame. And I I absolutely understand why, because see, something like gold feels very real. You can wear it, you can hold it, and it feels like security because our mothers, our grandmothers, for so many years, they've done the same thing. But here's what I want all of you to think about today. What if safety and growth weren't mutually exclusive? Now, um, what if you could have both? What if the choices that you're making today, say out of habit or out of primary conditioning or out of genuine belief for that matter, you're it's actually costing your financial independence. I'm sure a lot of you here want to do so much more and but are not able to because you're dependent on certain people for finances, right? But let me tell you that this webinar is going to tell you that what lots of people don't. We're going to break down a lot of the myths, share real stories. We have a lot of lovely case studies coming up where we've seen so many women from different walks of life just owning their finances and their lives, right? Uh, it's so empowering to see such things, right? So let's talk about it. We'll show you the blueprint, the Kodeeswari blueprint that may help you in a certain way to transform your financial life. So just take a deep breath, stay the 2 hours with us, and we hope that you have something to take away. If you would like to grab some coffee while you're listening and watching this webinar, please go ahead and let's get started with this. Okay, so let me share a statistic that shocked me to my very core. Right, India's women own 130 plus lakh crores in gold. Like, does that number even sound real? 130 plus lakh, right? That's like the GDP of so many countries. That's the entire GDP of so many countries. Now, that's the wealth that you, me, Archana, every woman in our generation and previous generations have maybe accumulated, right? But now, when we talk about owning gold, we call it an investment. We say my gold is a good investment, right? We say I'm building wealth through gold. But here's maybe an uncomfortable question that I want to ask you. Is gold really an investment? Okay. So let's look at gold through a very honest lens. Does gold really generate any monthly income? The answer is no. Does it give you a dividend? Does it give you returns every quarter? It just sits there, right? It looks very beautiful when you wear it in the form of jewelry on your wrist, around your neck, but is it really working for you? The next point we see here is there's no emergency value. So let's say there's a medical emergency in the family and you need money urgently. What do? Immediate thought has been, at least in the previous few generations, has been immediately go sell your gold. But here's the thing. When you sell gold urgently, you don't get the rate at the market, right? You get whatever the jeweler decides to give you. So you lose about 50, 20% right there in that transaction. You might not even reap what it's fully worth, right? And as for growth, the historic growth has been about, say, 7 to 8% in gold. That's decent, right? It's keeping pace with inflation. It's been the case for many years, but you're not getting ahead. You're not running on a treadmill that feels like progress, or it feels like you're running in the same place but moving nowhere. Yeah. Now that's why uh, it might not be the best or the only investment solution. It's not bad, but it's just not good enough, right? There is a lot of cultural significance that comes with it. There's a lot of recall value. There's a lot of memory and emotional value associated with an asset like gold. It's very beautiful. It's safe, but it's just not good enough anymore in today's financial scenario, the environment that we are in, right? And especially not for your financial independence, right? So that's why we like to call it the golden trap. We've been caught in that cage for so long, and we didn't even know that the door was open for us to leave and explore more options. So it's not the only viable option. It's not bad, but it's just not good enough. Next slide.
Meena ma'am actually, came to us for Kodeeswari. So at the time, she was a 48-year-old homemaker. She has good, gold jewelry, but there is no emergency fund or emergency reserve, or she doesn't have insurance. So what happened is she was just explaining, what really happened, and she actually had more gold, but basically when there was an urgent surgery needed for her husband, she actually sold her chain basically at 20% below the value. So when we were talking to her, we were asking her about like, is she aware about emergency fund, or is she aware about, like, she can take health insurance and take care of the family. And the point is that, see, basically she has some awareness about the process, like if we have health insurance, the money can be claimed, and especially about emergency funds. So we anyways tend to save certain amount, and we keep it liquid because we need it whenever we want it at the most, right? But when we had that conversation with Meena, we clearly understood that yes, it is there, but everything is in the form of gold. So the point here is that yes, 6 lakh worth of gold jewelry is still fine, but when she needed the most, right, at that time, uh, she thought it was a better investment, and it can still serve as an emergency vehicle. But at the same time, she sold her chain at 20% below the value. So basically, even let's say it's for 1 lakh, she got only 80,000 at that point of time. And even let's say you don't want to sell, you want to pledge it for, you get a loan out of it, still you are again paying, an interest for it, and then getting the jewelry back. So, for a lot of women we met in Kodeeswari, they all want to also financially, keep the money that is working for them. So basically, when you look into gold, it really serves as a use asset. Meaning, let's say I have a girl child for which in future for her marriage I need to keep some money in gold. I don't want to, change it frequently. Meaning, as the new money comes, or maybe for, as a new jewelry comes, I don't want to change it very frequently, but I want to hold it for very long term, is what whoever we talk to in Kodeeswari says. But our point is that why women stick only to jewelry and FD. Like, as we all know that now women are moving more towards formal investment platform. So when we tell them about the math behind it, then they started understanding that yes, I need gold, but it can be a use asset. It may not be a real investment asset.
Great. We saw like a very real sort of example here, right? Now, let me show you something that's going to sort of let you notice this as well. We'll do a simple comparison. Let's say you decide to invest 5,000 every month. That was maybe approximately how much she was spending in the previous slide on gold over the years. So if, say, Meena had invested in an SIP, the same amount, 5,000 every month, in a mutual fund for 10 years, here's what would have happened, right? Look at the final value. With gold at a 7% CAGR, she would have made 9.5 lakhs. But with SIP with an SIP mutual fund, she would have made 12.5 lakhs, right? That's almost a 4 lakh difference. So for doing exactly the same thing, investing, say, 5,000 a month for 10 years in two different asset classes, you are definitely seeing that one asset class is winning over the other, right? Gold being the traditional and mutual fund being what needs to be something people would start looking at. Again, we're not trying to tell people that gold is a bad investment. We're telling people that it's okay. It's just not good enough. You have so many more avenues for you to diversify your investments, right? But see, the final value is not the only advantage. There are so many more advantages that come to it, right? Let's talk about liquidity. Let's talk about tax benefits, right? Say there's an emergency and she needed money immediately, right? When she withdraws out of it, she'd have to, of course, rush to the jeweler, and she would lose 15-20% right there in that transaction and be absolutely devastated for not having reaped the entire benefit from the investment in gold. But if the same money was in an SIP, in a mutual fund, she would be using an app, right? Or she would be telling her advisor, you know what, I need so much money right away. And the liquidity will happen in T+1 days. And you will have whatever money you actually put in your bank account, right? And it's very liquid. It's a very liquid asset. Again, we've seen two benefits now. Third, we also have tax benefits. Gold does not have any tax benefit, right? There is zero tax benefits with gold. But with mutual funds, it's a whole other game. So, of course, we know there's something called long-term, short-term capital gains, etc. So in the case of long-term capital gains and mutual funds, say you hold them for more than 1 year. That's when it qualifies as long-term, right? It's taxed at a much lower rate. You get 12.5. Or in some cases, if your gains are within a certain amount, you're even exempted from the tax, right? So these are some real benefits that you will get out of diversifying into other assets as well. And this is not a small difference. 9.5 versus 12.5 plus is not a small difference. You can actually take care of so many more things during this time with such a small difference as opposed to settling for something low, right? And that comes very inherently for us as women, as mothers, as daughters. We're okay because we don't want to burden anybody else. But why burden ourselves when we have better options? Right? Why do we stick to gold? So the math is fairly clear, right? Even if the numbers are showing that mutual funds are better than gold, why is it that we still stick to gold? Why do we keep buying into gold? Why don't we just shift everything into mutual funds? So when we asked a few people in our families or at work, our house helps, or even some of our clients who weren't very confident with investing in mutual funds, right? Each of them had a real concern, right? The first one said, at least I can wear gold. At least I can see it. At least I have it with me. A lot of women say that, yes, I understand that returns are lower, but gold is just beautiful. I still want to continue wearing it. It's not just an investment. It's jewelry and it brings me joy. And I get it. I absolutely get what they're trying to say. But joy is not a financial strategy. That's what we need to understand here. You cannot build independence. You cannot build financial independence on jewelry, right? And it's okay that you want to own, but why not do something better as well? You keep some portion of it in gold if you really love it, wear it and enjoy it. But out of the 100%, maybe keep 5-10% in this and the rest of the 90% into assets that will really help you grow your wealth, right? The second excuse is that I don't understand mutual funds. This is also something that we hear quite often. And quite honestly, I feel very sad when I hear this. They say it's too complicated, it's too technical, I do not understand markets, and they just leave it to their husbands, right? Although I understand what place they're coming from, but I think it is high time that women also take charge of their finances. And a lot of women are now of the view and of the opinion that I should have an identity aside of my husband or aside of my partner, right? And that's the way it should be. But as you're doing this, it's okay that you don't understand something, but of course we have to make the effort to do it, right? But let me tell you that you don't need to be a market expert to be able to invest in a mutual fund. You really, really don't. There's no need for you to understand every bit of it, every technical term not required. We are not going to ask you to watch CNBC or read technical reports. I mean, you can, of course, do that if you're very interested. But what you need to understand or what you need to analyze is three things, right? First is, what is my goal? What am I investing for? How much time do I have? What is my time frame for investing? Is it 5 years? Is it 10 years? Is it 15 years? Is it till retirement? Third, how much can I invest every month? Is this going to be a fixed amount? Is it going to be variable because I do not get constant income every month? It's dependent on the kind of business that I do. Or I am in a very stable job that will be able to give me promotions and bonuses, which means I will be able to step up my investments as well. That's it. Just these three questions you answer, and I think you're on your way to creating real wealth, right? Everything else, from choosing the fund to managing it and monitoring it, we will help you with it. That's exactly what we do, right? Third excuse, we've already covered this. My husband handles my investment. This one is what really, really breaks my heart, right? Because it means that you have sort of given up on being responsible for your finances to somebody else. And see, here I'm not saying anything against husbands or partners. Of course, they all want the best for you, for us. But what happens when he's not around, right? To physically help you. What if there's an unexpected emergency and you also need to be at the face of the situation, right? And instead of you being able to help him with a more wise decision, what if he makes a bad decision with that money, right? So it is very important that you know about your own money. You're aware of what it is, how much it is, where it is, right? Not because you don't trust your husband or your partner, but because financial independence means that you take ownership of yourself and you take care of yourself, right? And we just, as women, we don't take care of just ourselves. We have to take care of so many people around us, right? While you can do all of that also, you do what you need to do for yourself, and you don't have to depend on anybody for security with that, right? That's the real power. And the fourth excuse, again, quite common, markets are risky. What if I lose my money? This is again very tricky because gold itself can fall. Gold rates fluctuate. But there's a perception that markets are risky. Of course, short-term markets can be volatile. But in the long term, say 10 years plus or even more, markets have historically done quite well. They've delivered constant and considerable returns and consistent returns over time, right? And for sure, better returns than gold. And the way to reduce the risk in the market is not to avoid them. That's just being cowardly. It's to invest systematically. It's to invest consistently, small amounts, but regular. And you spread your investments across multiple funds, which of course we will do for you, right? So when women say markets are risky, what I hear is, I'm not educated about the real risks. And that's okay. That's what today is about. And I'm glad all of you have joined this webinar, and that's what we're here to change. Now, what does a real financial plan look like? What do we do here at Kodeeswari? So if gold alone is not enough, what does this mean? What does financial security mean? What does financial security mean to all of you? We will give you a blueprint here at Kodeeswari that will help you become financially secure, right? And the real plan has five pillars, five major pillars. The first one is emergency fund. And this is a non-negotiable. Please get this straight in your head that it's a non-negotiable. Before you invest a single rupee in the markets and before you think about building wealth, you need to have at least 6 to 12 months of expenses sitting in a liquid and easy and accessible place, right? Now, let's say your monthly expenses are 50,000, right? And you need at least 3 to 6 lakhs in an emergency fund if that is the case, right? 6 to 12 months of your living expenses. So 50,000 monthly, if you think you're going to spend, you need 3 lakhs or 6 lakhs in that emergency fund. This is not an investment. This is what you fall back on. This is your safety net, because of course, life is definitely going to be throwing surprises at all of us. There's going to be some emergency, there's going to be some event, some situation that's going to come up. And this emergency fund means that you do not have to sell any of your investments or rush to the jeweler in desperation, right? The second pillar is term insurance. Now, for a lot of us, insurance is, it seems boring. Nobody wants to talk about it. Of course, we all have it, but we don't really indulge in any conversations. But if you have dependents, if your family depends on your income, your skills, or any financial contribution from your end, then you definitely need a term insurance. Why? Because God forbid, let nothing happen to anybody. If something happens, your family needs to be protected, right? They need to know that their expenses are covered. The rest of their life is covered. Their future is secure, right? It's not. Again, don't look at insurance as an investment. It's protection, right? It's basically love. It's saying that, you know what, even if I'm not here, my family is going to be okay, right? Third is SIPs for goals. And these are not generic goals. These are very specific goal-oriented investments. Maybe you want to fund your child's education. Maybe you want to build a retirement fund so you can live independently. Or maybe you have a dream. You want to travel the world. You want to start your own business, or you want to buy a house. These are real tangible goals. And for each goal, you should have a dedicated SIP that you set aside every month for that. And then you watch it grow. You work backwards from your goal and figure out how much you need every month. How much you need to save every month to actually reach it. And in no time, you would have actually reached your goals and you'd be on your path to sort of enjoying that trip to Maldives that you want to take. The fourth pillar is the goal tracker. This is very crucial in any process, not just a financial blueprint. It is very important to track your progress. You need to know whether you're on track to reach your goal. If I invested 5,000 a month for retirement and my target is 1 crore, am I on track? Can I retire at 55 or will I need to retire at 60? If I need to retire earlier, how much more do I have to put in? If you're able to answer these questions when you track, it gives you that visibility, it gives you control of the situations and the power to make any adjustments that you would like on the way, right? But while you are tracking your progress, the fifth pillar is reviewing your finances regularly. Your financial plan is not something that you get done, set aside and forget. Life happens, your goals may change, your income may change. Of course, the markets will also change. You need to review your plan every quarter or, bi-monthly at least. Sit down, take a look at the numbers and ask if everything is still on track. Do I need to adjust any part of it? Right? And the most critical part being gold doesn't tick even one of these boxes. It does not serve as an emergency fund because it takes time to liquidate and you may even lose money in the process. It's not insurance. It's most definitely not insurance. It doesn't help you track your goals because it doesn't generate that amount of income. It doesn't give you the visibility that you would like because it's just sitting there. And gold definitely does not drive you to think about your financial future regularly, right? But you can do all of this, right? You can create this blueprint. And when you do, let me tell you that a lot of things change. The amount of stress that you have with respect to this will reduce. The kind of confidence that you have increases. You will want to take more ownership. Your future becomes more secure. And that's exactly what we do here for you at Kodeeswari.
See, we have a lot of women who are traveling with us. We have nearly 120 clients after we started Kodeeswari. So, see, what we are trying to do here is very simple. See, before, let's talk honestly about gold FD and growth, right? So, before we move into our clients, like their case study, before that, let's understand something. So, just want to understand if gold is the best investment, let's say, and if our mothers and grandmothers and even us, if we are all right, then every Indian woman should be already wealthy, right? But that's not the case. Why? Because gold gives us emotional confidence, but it does not automatically give financial freedom. And one thing is that because it is trusted, because it has always been around wedding, emergency, security, when you look into it, gold is all linked to emotions. But one thing is that where most people doesn't say out loud is it does not generate income. It just sits there, as Aishwarya currently pointed out the previous slides. See, if we bought gold 20 years ago, yes, the price has gone up, but you should think about it whether it compounded or not. It didn't compound. It didn't pay you every year, basically. It didn't grow on growth. That compounding didn't happen. And jewelry, when you think about it, it's not an investment at all. Making charges go out, there are resale value because of which it comes down. And when you actually think it is quite safe, it quietly loses its efficiency also. So yes, gold is fine to store value, but does it multiply wealth is what the question that women needs to answer. And especially we didn't have any specific slides for FD because we all know FD, it just makes us feel very responsible because it doesn't go up or it doesn't go down, no stress. Just simply it is just gonna go at a rate of 6 to 7%. And when we think about it, inflation is also 6%. So what is the real return we are making here? It's zero. Yes, we can keep our emergency fund in FD. We can keep, let's say, as Aishwarya pointed out, if someone has around 30 to 40K as monthly expense, then at least at a rate, we need to keep around 2 to 3 lakh as an emergency fund. Not everything can go into a liquid mutual fund, or it can just simply sit in your bank account. So some part of it can still go to FD. But after tax, when we look into it, sometimes it's negative if someone has a tax implication, and they all just protect the number in your account, right? But they don't protect what money can buy in the future. See, what we are talking here is what money can buy you in the future. So when you look into it, FDs are not bad, gold are not bad. But when you look into it as an aspect of wealth creation, that is where the problem kicks in. So we all see, and when we think about women, we are not reckless with money. In fact, we are better savers than men, and that's what we have seen in the women who joined Kodeeswari also. The day they started investing, all the small savings that they do at the end of the month, at the mid of the month, other than SIP, they actively reaches to us and they want to invest that. So when you look into it, the actual issue is not risk taking. It's basically we are underestimating time and compounding. We don't understand how compounding works. And even a 35-year-old woman or a 40-year-old woman has something priceless, right? Which is our time. So when you look into it, we still have 20 years of compounding, which can do what gold and FDs never will. So this is not by trading. This is not by, what you are saying in the, YouTube channels, like buy this stock, sell at this price, make trades, nothing like that. You just stay invested in areas that actually work for you for a longer term. So when we talk to women, right, all of them have specific goals, especially in Meena ma'am's case. She has gold which is not liquid because all of them is in jewelry, and there is loss when she also wanted to sell for an emergency. There is no backup plan, and when we talked to her, we clearly told her that she can do a 10K SIP. First, she should start with an emergency fund, because she doesn't need to touch the jewelry also. At the same time, she has an emergency fund as a backup when there is an emergency. So this money just goes to that. And a 1 crore term insurance plan, because now she started working since her husband couldn't work anymore because of the health issue. Now she started working. Now the whole family depends on her income. Now she definitely needs at least a 1 crore term plan. So her thought before joining Kodeeswari was, okay, gold is there, it will save me, and I don't need to do anything beyond that. Some money is in FD. Let's that take care of our financial well-being. But it doesn't actually work that way, right? So now, with the changing environment, with the changing, financial, circumstances around us, we also need to upgrade our thinking and upgrade our investments better than what previous generation did. So for us, we still have time. So now she is doing a 10K SIP with a 50K emergency fund plan was also given, and a 1 crore term plan is also provided. And we also have Divya. She is a 35-year-old school teacher. She bought 10-gram gold every Diwali, basically 50K per year, whatever bonus she got, she invested in gold. And now we are doing a monthly SIP of 5,000 per month in diversified mutual funds. So this actually helped her fund her daughter's school fees. We also have two women who are with us in our office. They are taking care of the basically cleaning in the office area and all that. They also actually started saving for their children's education. They said, I can do monthly 500. I'll start with that. Whatever at the end of the month that I have extra, I'll I'll let you know. You just send me the link, I'll make the payment. And they started slowly, increasing the value. At first they said only 500 they can do, but wherever they got some additional cash, or at the end of the month they save additionally, they started increasing their investments. For them, it's not more like of an investment, it's basically a saving vehicle for them. They know it is compounding little better than FD, but yes, they need this money for their children's for their daughter's education. Both of them have like one has one daughter and the other ma'am has one son. Both of them are in their 6th grade. So what they said is, okay, maybe I'm not ready for a long-term investment, but let my money work there little more than what the traditional investments can give, and let me take that out and take care of my daughter and the son's education fee. So it was very special moment for us. Like we are able to help the women, irrespective of their, the knowledge about the fund, or irrespective of their social circumstances. So there is something that Kodeeswari is doing there. So when you see, the difference is that SIP is going to give you growth, liquidity, and there is tax benefits, whereas gold is sentimental but often underperforms. So for your future, let's focus on the SIP, meaning on the let's focus more than what a traditional investment can give you. So that is where the money will compound. And when we think about mutual funds, right? So maybe you people, usually women think about mutual fund in a way that it's very scary. So before I explain what is a mutual fund or how it works, let me say this very clearly. See, if mutual funds feel scary, it doesn't mean you are bad with money. It just mean no one explained to it properly before. So maybe think of mutual fund like a basket. You don't put all your money into one company. Your money is spread across many strong and well-known companies. So if one company has a bad year, the others balance it out. So this means that you are not betting on one horse. You are actually owning the entire race. And let me uh, explain to you in this way. Imagine an apartment association. See, each flat owner contributes money every month for maintenance, and that money is being managed by someone experienced. And the benefits are shared by everyone, right? A mutual fund also works the same way. Many investors pool money. A professional fund manager manages it. Money goes into large real companies and the gains are shared proportionately. So it's not like you are managing it alone, you are part of the group. So when you look at buying one stock, right, it's basically buying one stock is basically running like one shop. If something goes wrong, your entire income depends on that one shop. But a mutual fund is more like a supermarket, owning a supermarket, because there are multiple brands, multiple categories. Even if one product doesn't sell, others do. So this mutual fund reduces pressure on one decision. So when you invest in mutual fund, your money goes into companies like TCS, Infosys, HDFC Bank, Reliance, ITC. And we all know these are all the companies we use daily, we work with, we trust our salaries, phones, loans, groceries, everything. So this is not something like you put a money in somewhere where it is just a virtual money. These are all real businesses with real profits. So when so it's basically about not daily watching or predicting markets, timing when it will go high, when it will go low. And it's basically about starting early as long as immediately as you know about the mutual funds, staying consistent and letting the time do the work for you. Because see, everywhere market rewards patience and it will not reward panic or you know emergency selling. So gold feels safe because it doesn't move, and FD feels safe because numbers don't change very drastically. But even the real safety is when you're knowing your money will support your life 20 years from now. So when we look at a retirement planning for your future, definitely mutual funds gonna be there, help you build that long-term wealth and also continuously provide you a pension after that. So that's when we want to introduce Miss Jaya to you. So she is a 60-year-old widow, lives with her daughter from Toothukudi, and one of our client referred her for Kodeeswari. And at the time when she, reached out to us, she has a lot of gold but no monthly income. All she was looking at is to have a monthly income. And at first, she is very reluctant because this whole concept of mutual fund and investments, everything is very new to her. So we just told her because she doesn't have any other income flow, no money is coming in. So when you look into it, we suggested her, and gold's price was also peak at that point of time. So we suggested her she can sell some 50 gram of gold because she's not using that gold also for her because daughter is all settled off and she doesn't need this gold that she saved from her mother. So she started with 2.5 lakh in an SWP plan, and she started seeing the money is growing at the same time. Some money is coming to her as a monthly income. So now she increased her SIP, and she also she also redeemed some more gold and she invested into it. See, one thing, for the first time, my money is working hard than I ever did. This is something that she said to us, which we actually feel is the success of Kodeeswari. Because we explained her money is going to be here, invested in this kind of stocks. We gave her an investment plan, we gave her a strategy, and we also explained how she's going to get monthly income, how this is going to rise, and what are the potential threats and opportunities that she can see along the way. So when we look into it, gold can stay. We are not saying no to gold again. We are saying yes to something bigger. So Yes, if you love it, definitely keep, you can keep around 10% in gold, but the rest 90% must go into goals, growth, and greatness. So even if you start with, even if you're very new to market, even if you want to start with something small, start with something small. So no point in waiting for, a lot of examples to come in. You be an example and start with something small, what is comfortable for you, and then slowly build the 1 crore. Because we are not doing any trading here, we are not going to do any short term investments. All are very long term investments that can give you a comfortable growth than any other traditional investments you are doing for so long. So the truth is that 2025 is over. Your first crore journey can start today. And see, we take care of everyone, but our money needs to take care of us. So for that, the money has to work really hard than us. So that will happen. And that's why we don't actually push any products. We help women understand what they are investing for and what they are investing in. So the fear disappears. So when the understanding comes, the confidence automatically follows. See, we also provide one-on-one sessions. We also provide group sessions. Let's say your friends want to start together. You can have a group session where we can explain you how a mutual fund works, how the stocks in the mutual funds are being taken, and how we pick mutual funds for you. All that a one-on-one call for like half an hour and a group call for 1 hour. This kind of sessions we are providing other than this kind of a common webinar. So let's say we also had women who along with their friends, who along with their relatives, 4 women from Coimbatore, they joined us in this call. And once the call is over, they understood how things are going to work for them, and they started an SIP, and now they are actually doing lump sum very aggressively than men investors for me in Kodeeswari. So the point is that if you don't understand the concept, we can definitely get onto a one-on-one call, and group sessions are also available. You can make use of that opportunity. You can work together, and we can make this. We see women, they are saying just 3 things, right? It's because of fear, it's because of delay, or there is no guide. So all 3 will be taken care in Kodeeswari, and where the real conversation for wealth happens for your particular goal and for what you are dependent on. So what we actually need is a simple, clear personal plan, simple steps, someone guiding you every quarter, someone who speaks your language. And I think Kodeeswari is a place for that for you. See, your Kodeeswari formula, it's not something that we want to give it like, let's do this, you need to start with this money. So we don't put any bar on that money. But when you look into it, a 10,000 per month can grow into a crore in 15 years, and a 15,000 per month can grow into a crore in 12 years, and a 20,000 per month can grow into a crore in 10 years, provided that you also participate in the lump sum opportunities. You scale up investments wisely, meaning you start with 10,000, next year it could be 11,000, 12,000, whatever the extra that you can do as an SIP can help you reach it even faster. And when you look into it, again, a 20,000 per month SIP can grow into a crore in 10 years when there is good opportunity coming up. Market goes down and up. When it goes down, you need to put some extra money. When all this happens, your dream of becoming a Kodeeshwari becomes reality even faster than what we actually plan for. So when we look into it, we are very natural investors. If I say we are very disciplined, we are practical, consistent, because we are seeing women who are doing this with us for nearly 1 year now. We see women who start, but usually the problem comes with taking that decision. Okay, all the women attend the webinar, we have a one-on-one conversation, and yet at the end of the day, and then let me discuss with my husband and get back is what we usually hear, and then we never hear back from them. Yes, a lot of husbands are actually providing, supporting the women in taking the investment decisions also. And but let's say for your aim, for your goals, you can take your decision and your plan to start with some investments. You can also read about markets, We have a lot of channels where we are talking about how investments actually work for you. And I think the real wealth is built on the time that we are invested in the market.
Of course, thank you so much for being here and spending your Saturday morning with us. Don't forget to reach out to us if you have any questions. It was great to spend our morning with you, and we hope you've had some takeaways. We hope to see you in our upcoming webinars as well, and we also hope that we can onboard all of you as clients. Thank you. Have a great weekend ahead.